Hi, today we are going to discuss this subject. The Federal Reserve is going to meet next week on Tuesday and Wednesday. And in my personal opinion, it is time to raise interest rates. You have here the announcement on CNN, translating the Fed into English, why you should care. Basically, article, it confirms here the existence of this meeting on Tuesday and Wednesday. Most market participants, they consider that the Fed is likely to move only by September. However, for the first time, I consider that the Federal Reserve, in fact, has reasons to raise interest rates as soon as this coming week. One of my reasons, it is related to this report by Natixis, French bank. It is available on the web for those interested in these matters. It is from May 29, 2015. It starts by saying there is no possibility for diversification or hedging in a liquidity regime, since prices of all financial assets move in tandem. So then they explain quite well what they mean with this. You just have to go through the article if you are interested in. There is a link to the article in our website and in one of our blog posts from the past 3 weeks, since this article came to public. This is the website of this company, French bank, just for your reference, and we are going back here to the meeting. So for the first time since the bottom in 2009, in 2015, I started to see certain things that I consider personally quite unusual and serious in the market, and I've been referring to them by publishing certain videos and the policies that the Federal Reserve they have been following. I think that they start to have this negative impact. This to say that I consider that in 2009, when they decided to change certain rules that you are aware of, that was a turning point of the utmost importance, because without that change of rules, without that intervention, today you will not be probably in the position where you have, and the markets, they will not be where they are. And so I defended in the past years that the policy followed by United States, and in particular not only the Federal Reserve, but with the acceptance of the US government, it was the correct choice. At least they have several alternatives, but the others, they were likely by far worse. I'm not talking about the long term, but at least there was not other alternative for many reasons, which I'm not going to discuss here, being one of them, political reasons. Obviously, they had to choose this way, all right? Even if at that time people, they disagreed, or most, and many, in fact, throughout the years, they maintained a very suspicious attitude. The fact is that in the first years, I believe that it had a very positive impact by not resolving the problems that we had in the financial system, but at least by delaying, let's say, some of the consequences that otherwise they would have by far worse impact in the markets. By delaying, at least they had time to I would say, not to solve, but to partially address some of the problems that they existed, or that in fact they always existed in the past until the present moment. But I have not found that the policies that the Federal Reserve decided to put in practice to be 100% effective. But also I think that no one would expect before very difficult situations a policy to solve entirely the problem of economy. In fact, not only the US economy, but that it has very important consequence then all over the world. Nevertheless, I repeat that I consider that the policies followed by the US government, they were the best at that time. And quite frankly, for example, comparing to Europe, I think that Europe missed completely the train. And only recently, with Draghi, he, let's say, started to, or tried, or started to trying to change, comparing to the past to the others, what could be a better path to Europe going forward. But in my perspective, very late and with negative consequence, because also one of the things that I don't comprehend, quite frankly, found it very disappointing for any citizen, in particular Europeans, that the Greek problem, it remains, and quite frankly, I never seen any interest whatsoever by the Greeks to solve the problem, other than to continue following the same policy since the very first day, which is kick the can and we don't want to pay. So I think they have been, quite frankly, very clear with regards to that. And once the Greek people, they decided to choose this current government in place, these individuals, I think that this is so clear to everyone that is, or we has been following closely the meetings between some European leaders and the Greek government, that the situation, let's say, landed in a point which is absurd and ridiculous, and it continues to undermine the, let's say, the belief or the political, in fact, and the society in Europe, instead of Europeans believing or having reasons to find some European leaders to be credible, this impasse in the Greek case, it has been continuously undermining not only the Greek case, but what is even worse, the entire European Union, because it happens that it remains as a cancer where in fact this could have been solved a long time ago. It was not, or it has not been solved, because meanwhile, as you might, or as you are aware of, many financial institutions had a very important exposure to the Greek debt, and they had, meanwhile, during the past 4 years, to solve it and to decrease the risk of that exposure. Nevertheless, I repeat, that is absurd, it is ridiculous, the current situation in Europe with regards to this, to the Greeks. and I will not have any doubt whatsoever if things they will depend on me, which is not the case, to say bye-bye to Greece as soon as tomorrow, Monday, June 15, 2015. With regards to the Federal Reserve, I consider that for the first time they have reasons to raise, in fact, interest rates. Otherwise, we incur in the risk of the games, or some of the games that they have been played, and I've seen it for the first time in 2015, to turn or become more serious with profound negative consequence in the future. My final comments, they go to the recent announcement that you see here on this article. The World Bank and the IMF, recently they expressed their opinion by saying that the Federal Reserve should only move in 2016. Last year in 2014, I recorded a video which is available public to subscribers at stockmarketlive.tv, where I expressed the same opinion, but that it was based on data, existing data at that time in 2014, that the Federal Reserve was likely to move only in 2016. And in fact, today, still, I think that there are eventually that might be the case. But if that will be the case, that is to say, if the Federal Reserve is going to follow the opinion of the IMF or the World Bank and to move only in 2016, then we have a problem. And the problem that we have is that, like I said at that time in 2014, until this present moment, I think that the Federal Reserve had reasons to maintain the interest rates so low, in the sense that they will not shock any, I would say, investors or people in general, but by looking at the activities that we have seen in the markets, and in particular the markets, they have been in the past years, they have been rising continuously without any pullbacks whatsoever. And therefore, at this point, the Federal Reserve, if it continues not doing anything and moving or doing something only in 2016, I might conclude that there are here eventually other reasons other than those that they claim to be the original ones. And those or these, let's say, not to make any move until 2016 would be to pump the stock market. And quite frankly, I don't want to think or to believe that the Federal Reserve, as a credible institution, their objective it will be to pump the stock market. I don't think that it will be healthy, having in mind the mid to long term, and I don't think also that currently the conditions of the US economy, they are so, I would say, worrisome, that they do not justify or that they justify this interest situation to remain as it is until 2016. So I defend that the Federal Reserve, and this is my personal opinion, everyone is entitled to have their own opinion, I defend that I argue that my opinion, it should be that the Federal Reserve, it has today reasons immediately to raise rates and to explain, in fact, that their objective going forward, what will be their strategy to investors, to institutions, and that the path to raise interest rates to be eventually rather smooth, rather than to delay the decision of increasing the interest rate until 2016. In other words, it is by far more important what the Fed how they are going to explain and what they are going to do, rather than when they are going to do. That is what I'm trying to say. If the longer you wait to have the interest rate, I think it will be worse. The sooner, the better. But the best is to explain how you are going to do it, mid-term or long-term, and therefore I think that I've been quite clear with regards to this matter. So I disagree profoundly with the opinion of the World Bank or the IMF, because in my perspective this announcement in fact should be made this week, and with an explanation how they are going to proceed. That will be by far more credible, rather than to continue, or at least not to continue, but to enter in that field of speculation where the objective eventually of the Federal Reserve, it will be a different one compared to the original one. So I repeat that I always found the Federal Reserve to be rather credible, and compared to many other institutions, and therefore the Federal Reserve should not follow or should disregard the opinion of others who might have personal or third-party interests, as the case of the IMF and the World Bank.